little technical difficulties this morning, or this just before the class started, but I got it all figured out right at the last moment. So we're back in business, and hopefully we got Mark Peterson here. I was just talking to Mark, my buddy Mark, wondering if he's here. I don't know if he can respond and say hello, but I was just on the phone with him, and it's good to hear from him. So what I want to do today is I had somebody ask me when we traded Power Hour last time. We traded on the traded the morning session, didn't we? Traded the morning session, but we traded all mini accounts. And I had somebody ask me, Mark, there he is. Good to see you, Mark. Glad to have you here in class. So what we had is we had somebody ask if we could trade the minis, or not the minis, but the micros, the little guys. So we're going to do a little day trading on the micros. Now, the micros are not great for scalping, and we like to generally do scalping in Power Hour, but we're going to try and do a little day trading. All right, day trading course for me, my definition of day trading is we're going to try and catch a trend and go for a long period of time. Okay, and then for scalping, we're just going to try and capture small little pieces out of the market as they explode, 1 or 2 bars, 3, 4 bars, maybe at the most. I mean, if they've got 4, 5, 6 bars in them when you're scalping, that thing's got mold growing on it. All right, so we're going to just go in and make a differentiation between what we're doing here. We're day trading or we're scalping. If we're going to do the micros, we have to do a day trade. We have to catch a trend because you have to stay in there a little longer, because we have the commissions are smaller on the micros, and remember the micros are 10 times smaller than the minis. So if you could have made $100 in the mini, it would be $10 in the micro. Of course, it goes the other way too. If you would have lost $100 in the mini, you only lose $10 in the micro. So you have commissions on both, but the commissions are the size of the account that we're trading, or the size of the market that we're trading, is 10 times smaller from a mini to a micro. But the commissions are not 10 times smaller. So you have to take that into consideration. All right. So hopefully that helps you understand the difference between the two. So let's come in here, and you can see that this is the way we had it all set up for last time. And we were looking for the market to trade the minis, but we're going to go in and set up the micros now. And I think I might already actually have them all set up. Minis in my portfolio. Micro indexes right there. So let's go take a look at that and see what those micro indexes look like. All right. And there's the micro indexes. So we got the Dow. Now these are all range bars. Range bar 10s. This looks like how I set this up last time. And it's moving a little fast. Let's go and we were talking about 2-minute charts. So let's go back and we're going to look at 2-minute charts on each one of these. All right. So this is to follow up on our university class where we taught all this stuff at the university, and now we're going to practice what we preach. And we like the 2-minute chart. All right. So the 1-minute chart is nice, but it's a little bit more sketchy, right? It jumps around a little bit more. So our little dots sometimes get stopped out before we can get on top of the trend. So if we go to a 2-minute chart, then it kind of scales those out. And you can see that the settings that I'm using for this, and these are green, which is okay. All right. Can we use green? Usually they're yellow. All right, but we'll just use green because that's fun. And then we got yellow. We've got yellow arrows. But you can see the period is 1 and the stop factor is 1. So we start that off with 1 and 1. Now we can make it a little bit more aggressive. Aggressive's this way. Make it a little bit more aggressive. Put those dots in tighter. Or we can make it a little less aggressive and pull those stops out a little bit farther. All right, you can do it however you want, whatever makes you feel happy. But I say we start as a starting place at 1 to 1. All right, and that's just going to capture nice little runs in the market. It's not going to catch the big long trends. Like if you want to go and catch all the way from this one to this one and not get out with this little 4-bar red thing, you'd have to loosen that up. So you'd have to loosen it up all the way up here, so your little green dots are all the way back here, and that would be 3.1. All right, and that gives your market more room to grow, and you'd catch longer trends. Okay, it'd be more like trading on a 5-minute chart style time frame. But if you go anything shorter, like even right there, you say, well, I'll go 2.5. Well, 2.5 isn't going to do you any good because you're still going to get stopped out and you're not going to catch that next trend. So if that's the case, you might as well go all the way up there and see if you can't catch a little bit more income out of that last little drop. So if we drop that down, we're going to bring those dots in. And you'll notice that it seems like about 1 and 1 is a pretty good place to start to catch a trend. And sometimes these little bars that come back and pop back against us, let's see if we can make this a little bigger for you. These bars that pop back against you right here, sometimes those little buggers right there will stop you out and then turn around and take off and run again. So you have to be mindful of that we got those little things happening in there every now and again. So we got some, if you come over here and look at the S&P, we got that same thing happening right there. So we got a little bar that tried to pop back and stop us out. Our stop is far enough back that it didn't stop us out. Right here, I don't know. It looks like it touched them. It might have stopped us out right there and then, taken off and gone a little bit farther. But I don't know. You can't really tell without having had run it. So we're going to try and look for an opportunity to get in the markets. We're definitely in an uptrend. All right. So we're in an uptrend. And the market's we'll just see if we can get an opportunity in here to put something on here quick. See, it's starting to rally here, but it's making a little pullback. It might be we don't know which direction it's going to go. We got drive 1, we got drive 2. We'd have to blow it up, see if what drive we're in. Let's roll up. Let's look at the Dow. Oh, look at that. We've got the stupid market flushed really hard this morning, and then it took off. This is kind of a crazy little market. I don't know. This thing's kind of a bottoming formation in here. I almost want to call that drive 1. What the heck is that? We're getting up there. Not real confident to take a long position right here. I mean, it is a 2-minute chart, so it could still, if we went out and looked at a longer term chart, we need to sometimes spend a little bit more time looking at longer term charts to see where we're at in the overall longer term trend. But I don't know really where we're at. Right now, it just kind of died again. Doggone it. It's that hour before power hour that's been paying off for us. This hour here is really kind of slowed down. In the last 10 minutes is about all we've been getting the last little while. So it's kind of flushing right here. Problem is, see, that was a higher high. I went up and tried to break that high right there. So we got a natural trend line that's coming in here. Not sure I want to take that short position right there. We could take it down here on the Russell, just because the Russell's so small. And we are on the micros. Not that we want to lose money. We want to still be right. But if that market flushes, we wish we were in. So let's put a couple of them on there. Let's start with 3. It's coming back against us. Let's hold on a second. Still trying to rise. Still trying to rise. Look at this one here. Maybe we don't want to go short. We'll save that one for short. We'll see if we want to go long in here. See, we need a good trend. We need some oomph behind this thing, and we're just not. Right now, it doesn't feel real oomphy. The NASDAQ's trying to go. It's trying to keep going. Let's see if it'll pull back just a little bit. Maybe we'll put 1 on. We'll buy a NASDAQ right here. Oh, I'm on the wrong, daggone it. Wrong chart. Didn't want to buy that one, but we'll keep it since we bought it. And this one, I still feel like I want to take a short just in case. We'll hedge a little bit. We'll use the QOCO. So that's going to drop in there for us automatically. These I did manually. I haven't got my stop in there. So we'll come in here and we'll drop a stop. I'm just going to drop it manually. Go in there, you hit edit trail on the ATR, which is, in this case, the little green dots. We're not getting anything out of here. We need to put our stop in. Because I'm not real confident this thing's going to go up. If it doesn't go up, we'll just get right back out. We've got a short position on the Russell. And we're just trying to get ourselves into a position and see if we can't let this market run. See if we can't get a little trend going. But we're trading the micros now, not the minis. This is more like what it would be like if you were over trading in the stock market with, 100 shares or 50, 75, 80, 200 shares or something on some of these markets. This is about the same leverage that you get over there in a cash account. You get over here with the micros. So it's not like it's small. It's just not big like the minis. This is the micros. So it's fun. It's nice. It's good trading. You can make money here if the market will move. And of course, you can get eaten alive if it just sits there and bounces back and forth, and you keep trying to jump in and out, in and out, in and out, in and out all the time. So we need a trend. Which one did we get stopped on? We got stopped out on the Russell. Okay, so we got something happening here. A single here. I thought we went in with more on the NASDAQ. I thought we put a couple in. Looks like we only have one. It's trying to go. We're going to add another one to the NASDAQ. Try and get them in here early so they don't cost us too much. Okay, if we increase the quantity for the longs, we have to increase our stops. Put our stop in there. All right. See if we can't just get this thing up to break even. Now, I know it's not. We're buying at the top. We're buying high and we're trying to sell higher. See if it'll just keep running. Come on, little Dow. Should we pull out our Mark? Have you seen our? I tell everybody this is my lesson, Mark. Are you still here? I gotta show you something. What I do is I can teach you all the setups, the triggers. I can teach you the mathematical models, how the software works. I can teach you all the strategies. I can teach you Fibonacci and Elliott wave and zigzag, and I can teach you all the fun stuff and what a limit order is and what a stop order is and how all these things work. And I can show you what ATRs are, and I can show you how to auto trail, and I can show you all that stuff. The one thing I can't do is once you get into the market, I can't make it move in your favor. But I figured out a way to do that, Mark. I can make the market move now. So once I get in, all I have to do is pull up my voodoo doll and start stabbing him with a pin. And he'll make the market move. Go, go. This is the Dow. And this one here, this is the S&P 500. So I'm not in the S&P 500. I better not stab him because I don't have any orders in him. But I do have one in the NASDAQ, and this is Mr. NASDAQ. Go in my favor. And if you put it in, you put it in his hand, that means money. So we just put it in his hand. And same with this one. We'll put it in his hand right here. And that, my friend, will make the market move in my favor. Come on. It always works. One thing I can't do is make the market move. So I have to get voodoo or magic or something. Sometimes the market just doesn't want to go anywhere. Just wants to sit there. You put an order in, and if it won't move, can't make money. So not a lot you can do about it. We might have to do a little scalping. If we get down too far, we'll go back over to the larger markets and do a little scalping, but we'll see if the markets aren't going to trend a little bit for us today, see if we can catch a trend. There's nice trends earlier. You saw them. Nice trends back in here. Look at that. If you'd have caught one of these, let's go look at, I hate to go, let's just do it like this. If you'd have caught from, let's just say we got stopped out right there. See that? So let's take our dollar calculator and measure from, let's say we got in here and we got out there. Well, that would have been $8 or $80 on the bigger market. Let's say just from here to here. That was a nice move. That'd have been $91. $100. That's, yeah, can't, better than a stick in the eye. So you can see that there's a little bit of money in these micros, and that's all right. You can stay in longer. You don't have to trail so much. You don't have to worry about it so much. We're getting a little movement here. Here we go. Look at this. Look at this, Mark. Look at this. Let's take another Russell in here. Let's go. Boom. Just like that. So we got a Russell in there now too. Come on. See, it worked. I better stab him some more. I better stab these guys some more. Right in the heart. There's a black one. That's that one. That's our Dow. And there's a green one. That's the NASDAQ. He's not going as hard. Stab him harder. Stab him in the head. I don't know where to stab him. Just stab him. Stick pins in him. That makes him want to do things. So we're in the Dow. Oh, we got to get our NASDAQ up here. We got little Mr. NASDAQ over here too. So we got Dow. We got 3 trades going, man. This will make them rise in price. It's always worked in the past, every single time. Come on, markets. That's it. That's trading. That's all you can do. Once you're in the market, just sit and watch it go. Go, go, go. Get your voodoo dolls out. Start stabbing them, because that's the only power you got over this market. Come on, market. Keep them up there. Keep them going. Now, remember, we're up $142 right now. That'd be $1,300 and something if we were in the bigger market. Do the same exact thing. It's just more money. Of course, you lose more money when you're wrong, but we're never wrong because we have voodoo on our side. All right. We have voodoo dolls. Boom, 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 boom. Go voodoo doll. That's $1,000. Remember, our goal when we trade on the micro minis is $50. Once you make $50, that's exactly the same as making $500 on the minis. This is micros. Mark says he's got running a micro and a mini mini S&P on the multi window looks identical to me on the 5-minute. Frosty says that he got his voodoo dolls out and they worked for him yesterday. Get him out, man. Pull them out. Let's make it happen. All right, let's say hi to some people while we're here. We got John C. Gasley. How you doing, John? It's good to see you here. We got Bruce coming in with the silver, Bruce. We got Mark Peterson, already said hello. And then we got Gary White. Nice to see you, Gary. Frosty, Mr. Michael's in the house. It's nice to see you, buddy. Glad you got your voodoo dolls out, man. You're making it work for you. You think they're going to take us off because of our voodoo dolls, huh? Well, maybe. These guys are pretty particular about what they let you say and do. Glad you're having fun, Jeff. You think they're going to kick us off because we got voodoo dolls on here and we're stabbing them to death? But they're really working. Man, look at them go. I guess we don't have any. Wait a second. Where's our green dots? I thought they flipped. Edit the trail ATR. We got to get that one flipped. There it goes. We don't have anything on the S&P. We could just go exit all right now and take our money. Take our money and run. We'd be up $200 and almost $300 right now. But we can just let it go until the little green dot takes us out if we want. We don't know how far it's going to go. We could ask Mr. Voodoo Doll, how far is it going to go, Mr. Voodoo Doll? Is it going to keep going? Is it going to keep rising? Should we keep letting it go, or should we take our profits and run? Huh? Are you a little worried? Are you a little nervous? What do you think, little voodoo doll? We're up $365. That's $3,700 on the regular accounts. Man, these voodoo dolls work well. Holy cow, I'm glad I got those. Mark, you got to get you some voodoo dolls. Kim's, good to see you. Glad you could make it. We're doing well today. The market's on a little tear here, and we caught it with the micros. We decided to trade the micros today. And so we're in here with the micros. I think we're kind of petering out right here. Would probably be good right there to take that money off the table right there. But heck, you never do want to do that because you don't know how far it's going to go. We're up that's $3,600 on the minis. We're up $380. We're breaking that. Come on, buddy. Can you break that 43,100 right there? I think that'd be a good place to take some profits. Maybe what we can do is we can come in here. I'll show you how to castle. All right, we're going to do that. We're going to come in here. I'll show you how to castle. You add one, boom, just like that. And then we take one right off, just like that. All right. Now, what did that do for us? That added one in. So we dollar cost averaged in, and it didn't dollar cost average 50%. It only went 33% because we have two, we had three, we get 33%, jumps up 33%. If I'd have taken one off and then added one on, it would have jumped up 50%. So it would have put us up above our trailing stop. Now, I don't like to jump my stops above my trailing stop. So we just took a little profit. Did you see that? But it was 33%, not 50%. So we could do it again, but that would jump us up on this one. We're barely at break even on that one. We're barely at break even on this one too. So we'll let them go a little bit longer. Did you see how we took a little profit doing that? Do it again, Land. Do it again. Well, the problem is they're not in the frame of mind to do it again. We could do it again, though. We'll do it again. Watch this. Okay, we'll do it one more time. See, we got quantity two. If I take one off, if I just say sell one, buy one, that would jump my dollar cost average 50%. But that would put my order way up here. I don't want to do that. I don't want to really jump it above my stop, so I will take 33% instead of 50%. So what I'm going to do is I'm going to buy one, boom, just like that. See how it jumped at 33%, not 50%. Sell one. Now I'm back to two, and I took some profits. But the problem with doing that, if I do it too soon, it puts my break even above my stop, and I don't really want that. So I wait until it gets a little bit farther ahead so that when I dollar cost average up into the position. See, this is called pillaring as opposed to pyramiding. Remember pyramiding versus pillaring? The last thing we want to do is build an upside down pyramid where we end up with all of our shares. We keep adding in as the market goes up. Because what happens? If you get an upside down pyramid, suddenly the market falls, one little tick, you've lost everything because you got an upside. All your weight is at the top. And that's what the big speculators, the big banks and hedge funds, that's what they want you to do. I'm going to take an exit. So we took our profits off. We're going to go exit chart here. And we're going to exit chart here. So we're up $272 for that. So that's what the big banks and hedge funds want. It might keep going, but I feel like we're getting a little peter out up in here. So I took my profits. We'll see if it'll give it a little pullback, and then we'll jump back in again. But it gives, if you get an upside down pyramid and you just keep adding on your positions as you go up, the market only has to drop just a couple pennies, and it takes you back to break even because you've dollar cost averaged yourself all the way up. That's called the accumulation distribution model by Richard Wyckoff. You want to learn all about Richard Wyckoff because he teaches you that theory, and he tells you, look, all the banks and hedge funds, the big banks, hedge funds, BlackRock, Vanguard, State Street, these guys, they have all the money in the world. They already have all the money. They can manipulate these markets to their ends. They can come in here and make them do whatever they want. So if they want to make some money, what they do is they'll set these markets up so that they can rise them and get all of us retail traders to buy. They love us to buy these upside down pyramids because they can run these markets up and then they drop them and they take all our money. That's how they do it. They want the only money they don't have is what's in your pocket, and they want that too. So this is how they manipulate us into building upside down pyramids. So what they do is they buy low and sell high, and then they try to get us to buy high and sell higher. Buy high, sell higher. That's a tough strategy. It's not that you can't do it. You certainly can. But they like to buy low and sell high. So what they do is they buy through what they call the accumulation stage, right? So if you ever see a market, let's pull one up, see if we can find what I'm talking about here. Okay, if you ever see a market go through a big, long, sideways, choppy trend like that, that's called the accumulation stage. All right, and you can see that. Let's get rid of some of these indicators down here, and we'll add another one. I'm going to add in one called the Chalkin money flow right there. There it is. And so you can see the Chalkin money flow, and it tells you that this market is going through a huge accumulation stage right here. Now they start to accumulate on the way down, but we're too big, we're too small to do that. So we'll probably accumulate over here if we're going to do it. See how they're accumulating? That's why it's green. That means the big boys, the Chalkin money flow tells you what the big boys are doing, and they're accumulating. They're buying, 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 buying. When it's all choppy and ugly like this, they like to buy. Okay. And then once they get all the shares that they want, they're loaded up for bear. What do? They run, they pop the market. They do this to it. They make it do this. You think that this is random? This ain't random. This is all set up just for you so that you'll start to buy here. So you start to buy, you get your trigger from your favorite indicator, the MACD, which is one of the favorite indicators. And then you get another little break and you just start loading up for bear. And you're like, wow, I'm above the 50 period moving average. I'm going to buy, buy, buy. So you start to buy all the way up this trend. I'm going to buy some more. Oh, I'm going to buy some more. I'm going to buy some more. I'm going to buy some more. Oh, I'm going to buy more. Who's selling to you? These are one for one markets, which means that for every buyer, there's got to be a seller. And if you're sitting here, and when I say you, I mean, retail traders in general, which is what we all are, right? So they manipulate us into buying. So we like to buy, build a big old upside down pyramid all the way up here. And then what happens? They like you to go up there with your upside down pyramid, and then they go wham, and they take it all. Because for one buyer for every seller means that if you're buying all the way up this trend, somebody's got to be selling it to you. Who's selling it? Well, it's the guys who bought them all down here, the big banks and the hedge funds. They loaded up here, and the whole way, all the way up this trend, when the retail traders buying, the big banks and hedge funds are selling. So when it gets up here, they're out of money. I mean, they're out of shares. They're out of contracts in this case. They don't have any left. So what happens? They pull the rug out from under you. And then they manipulate the markets into doing these types of things. And then we think it's going to go again. And so we load up again, and then they flush it again. That's called the distribution. All right. Accumulation, distribution. They start distributing down through here and getting rid of all their shares. They're distributing, buying them all back up again, going back into the same pattern all over again. See, and then they do this. And then that's why they start buying them back up through here as it comes back down over here. So that's how they do it. They buy here and sell to us as we buy. We buy all the way up here and then sell all the way to them as it goes down. And that's why they make money and we lose money. So don't be that guy. Yeah, I was smart to get out. Now, I should have got in to the short side, but I was sure smart to get out, wasn't I? Sure makes me look smart today. That's a lesson of accumulation distribution. So that's what you need to be mindful of. It's called the Wyckoff theory. All right. So if you want to read where I've written about the Wyckoff theory, you can go out to my little book online, right? Which is right here. Just go over to Amazon and search Lan H. Turner, and you can get my playbook of strategies. It's on Amazon, and it's a 238-page workbook. It's full color. It's 8.5 by 11. You can lay it out on your desk. It's not something you're going to read at night as you go to sleep. It's not a storybook. It's an actual workbook. So you can lay it on your desk and you can follow the instructions. It's got all of your odds in there, but it's got a section in there on accumulation distribution. It's Wyckoff theory. So that's my book. You can go get it. Again, you have to search Lan H. Turner on Amazon, or you can take your phone and hit that little square thing, and that'll take you over there as well. So if you want to read what I've written about it, or you can just go out and find some YouTube videos about it and start watching Richard Wyckoff Accumulation Distribution. That'd probably be a good thing to do too. And, along with my book. Of course, you want my book. Of course you do. Of course you want my book. Right? Right, Kim Moss? Everybody wants my book. So that's the way it works. So that's what's happening here. Now watch. They'll probably watch this thing. They want to get some more money. So let's watch and see if they don't do the traditional thing, which is make it come back up a little bit. And then everybody will start buying all the way back up in here. They're freaking out right here. You can just see them. You can see all the little retail traders in there jumping ship. Ah, get out, sell, sell, sell. But they're not selling them all because they're like, well, maybe it'll go back up. So I'll sell a few, sell a few. Oh, they're getting panic. Look at them panic. Look at them sell. All the guys they've been buying all the way up this trend. Now they're panic selling. Oh, no. Ah, get out, get out. And then they'll stop selling. They'll stop selling. Watch, they'll stop selling and it'll start to go back up a little bit. And it'll get a little encouragement from the big banks and hedge funds. They'll push it up a little bit. Well, I don't know. We're running into the end of the day. It might just be over. Might put a fork in it. But we'll see. What they like to do is they like to push it back up again. That's what gives us what we call an ABC top formation, all right? And that's what they'll do. They kind of like to push it back up again a little bit, and it gets all the retail traders to say, oh, I shouldn't have sold. It's going to go up and go to the moon. And so they all start buying back in again. And then they flush it again. Boom. And they laugh. They think it's so funny. And then they take all your money all the way down to here. All right. That's how they do it. This is where we get an A, B, C, or a 1, 2, 3 top formation. All right. Oftentimes we'll call those head and shoulders formations. They think it's funny. Oh, they laugh and laugh. They think it's so funny because they make so much money doing that. So we'll see. This is the panic selling right here. Everybody's panicking. You can see it. You see it in the market. Look at how scared they are. I'm panicking like crazy. You're getting a few buyers in here. Look over here. Look on the little mini window over here in the top right corner. Look at that. You're getting some buyers in here. Look at them buying. They're buying it back up. They're going to buy it back up. They're going to start buying. Look at them buy. Look at them buy. They're a little scared though. Selling, buying, buying, selling. They don't know what to do. Oh, that was the wrong thing to do. Get back out. Get back out. They're panicking. Watch them panic. They're panicking some more. How far is this thing going to go? Well, if it comes all the way back down to the accumulation zone, oftentimes we see this thing come back down into the delta cone of probability, right? So if we do that, that's about right down in here. And so here's the delta cone of probability right in there. So usually what we'll see to get that ABC pattern is that we're going to see them come in. They'll drive it down here like this. You watch and see. They'll drive it down here sometimes right around 38.2. That's the spot they like to bring it before they start bringing it back up and trying to get you guys to buy all back in again, thinking that it's going to go up and do this. Of course, we've got 25 minutes till the market closes. We'll have to see. See that? They're buying. Look at them buy. Look over here on the mini chart. Look at them buy. They're buying. They're getting back in. They're buying. Look at them buy. Buy, buy, buy. There's a few guys buying. It might be the big banks and hedge funds turning it right here at 38.2 because it takes a bit to do that. Stop the slide and start the rally going the other direction. What they want to do is they want to get the retail traders to jump back on. And everything that they just lost right here, and everybody who jumped out, they want to now get them back in. Say, I want to get my money back. Don't you want to get your money back? They got get backitis. And so they want to see it go up. All right. So they want to see it go up. So they're trying to get into the market, trying to push it, trying to turn it around. And remember, this is the Dow. So it not only trades over here in the futures markets, also over in the stock market. So they're trading the Dow. Let's see what they do. It might flush a little bit more. You never know what's going to happen. This is the Fibonacci sweet spot right here. Delta cone of probability. What's the delta cone of probability, Lan? I'm new to your class, and I've never heard you talk about the delta cone of probability before. Oh, I'm glad you asked. Here, let me see if I can find it, and I will show it to you. Delta cone of probability. It is. Is that it? No, that's not it. Where is the delta colon of probability in my slide deck? Down there somewhere. There it is. I found it. There it is. Calculating the delta Kona probability. Now, that's my name for it. I shortened it. The real name is the 68, 95, 99.7 empirical data distribution rule, which tells us that approximately 68.2% of the time, markets like to stay within the one standard deviation. And then around 95.4% of the time, they like to go to two standard deviations. Nearly 99.7% of the time, they'll fall within three standard deviations. All right. And so that's the name of the game. That's what we're looking like. Fibonacci rulers measure the retracement and extension levels to identify mean revision points. Bollinger Bands visualize volatility and potential reversion zones around the mean. RAF channel detects the linear trends. And these are tools that can help you look for the deviation around the one standard deviation, right? Then we have entry points. Traders look for a deviation from the mean, one standard to two standard deviations of the potential entry points for mean reversion trades. Risk management, understanding revision zones helps in setting stop losses and profit targets. All right. Well, oftentimes option traders use the mean revision. This is the one standard deviation comes from options. You've probably heard of the delta. That's why I call it the delta Kona probability. So delta in options is where we get the delta Kona probability, but that's also what the Fibonacci ruler is based on. So if you think about a delta Kona probability, the Fibonacci ruler is just that. All right. It's the delta Kona probability. So the probability is the one standard deviation. All I've done is turned it on its side, because usually you see the standard deviation drawn like this, right? And then this is your standard deviation. Okay. So all we do is take that, turn it sideways, like that, and then it's on its side, and that becomes the Fibonacci ruler. So the market likes to go from the bottom up and then back to the standard deviation. And then we'll go up, back to the standard deviation, up, back to the standard deviation. And that's how markets go through waves patterns. All right. So right now we're right down here in this delta Kona probability, and we're anticipating a rise in price. We want to see it turn and start to go back up. The mathematical model is telling us that when that green light crosses, but you'll notice that it flushed fast. I mean, this is 50%. This is 50% of that entire move. So that entire move that took all day long, all morning, all day, clear back here from 9:30 in the morning, all day, it lost 50% of the value of that entire move all day in the last like 6 minutes, all the way back down to 50%. 50% of the value. That's why we like to take short positions. We like to trade down. Not that markets can't have bursts and go back up. Look at this. They certainly can. But they generally do this kind of thing when they go up. People get into markets slowly. They accumulate shares over time, which is what the big banks want you to do. Again, they want to sell to you as you buy more, buy more. They want you to buy more. They want you to build that big upside down pyramid, because markets flush hard. It's like they take the escalator up and they take the elevator down. All right. So bam, that was the down elevator right there. That was a down elevator. That was a down elevator. And it lost it. Look, if you go from here to here all the way to the top, look at that. It lost 38% of its value in like 4 bars. And it took it all the way to get up there. It took it all afternoon to get up there. And then bam, took it all to get up there. And bam, all the way to get up there. And then bam, people panic. They don't panic into markets. They don't bail into a market. They bail out of a market. Okay. So you got to remember that the markets fall a lot faster than they rise. So if you're one of those accumulators and you like to accumulate, be careful not to build that upside down pyramid. Build yourself a pillar like I was doing with the what I call it castling. I stole that from playing chess, right? You castle. But what you do is you swap one for the other. And that's why I call it castling, because when you're playing chess, you're swapping one for the other. And we're going to do the same thing with this one. We're going to buy one and then we're going to sell one immediately, and we're going to swap it out. We still have quantity too, but we took some profits. Man, look at it go. It's flushing like a toilet. I don't know if we're going to get that ABC pattern. It'll come down. It's got to go back up here. We just don't know where it's going to happen. It might come all the way down here and then wander like that. Who knows? Who knows? The only guy that knows is this guy right here. He knows. He can tell you. Okay. And if we stab him enough, he'll start doing what we want. So we stop stabbing me. Okay, I'll do what you want. That's how that works. All right. Black magic. Frosty thinks we're going to get our account kicked off because we have, because we're stabbing these little fellas, these little voodoo dolls. I read the instructions. And for us, we want to put the little sticker in his right hand. Yeah, there we go. All right. The only regret we have on this trade now is that we didn't take the short position, Mark. Look at that baby run, man. Holy cow. Wow. Wow, wow, wow. Wow, what a flush. That's a 50 period moving average. Let's put the 200 on there. We're going to come into our, let's see, we got them active right here. We're going to come into our moving averages. And 200. Let's put that on there. Oh, look at that. That's a magic line. Let's save that up there. Hey, tell him about that. Are you familiar with the 200 period moving average? He says he is. He says, yeah, he likes to drive the markets down to 200 period moving averages all the time. That's a pretty favorite of his. So let's come in here, save and apply that to all settings. We'll put the 200 moving average on all of them. Look at that. 200 moving average way down here on this one. Way down here on this one. Way down here on this one. But the Dow came down and touched it like a train on rails. Okay, let's watch the trades. See if it's going to, people start buying. Watch them buy right here. See if they'll start buying. Buy, buy, buy. We got 15 minutes till the bell closes. See if some of these guys want to buy at the end of the day. Come on, rally that baby up there. We'll get much of a move higher. Going into the close. We got some short sellers in here. So these guys all went short. They were smart. Smarter than me. I just got out. I didn't take the short side. So these guys are selling out right here. All right. So they're selling out. Now they got to buy to get back out. Okay. Because they're into the short side. Now think about it. If you sell first, you got to buy to get out. So if they buy, what does buying do? Well, buying makes the market go up. So you got a bunch of guys now starting to buy in, which means they're selling out their short positions. So that should cause that little bounce. We should see that little bounce in there. And if that's the big hedge funds and banks that did that, they sold, rode that thing all the way down, right? They got rid of all their shares. They got rid of all their shares up here. Now they're taking short positions. They got to buy and get out. So they're buying. And what does that do? If the big banks come in here and start to buy right in here, you see our little thing turning around down in here? We could turn on, let's see if we got chart overlay. Let's come in here, chart, add an indicator window, chalk and money flow, chalk and money flow. There it is. Look at them buy. Look, I told you. Look at that. See, I told you. Big banks are buying up right in here. Look, they're getting ready to turn out. Okay, so they're buying right here. They're accumulating what's left of them anyway. Now, this is just a mathematical model. It doesn't know. This is the only guy that really knows what the market's going to do. He's really the only one. Indicators are just, the reason they're green is because the market's there. The market's not there because the indicator's green. All right. So those are buyers in there. Now, what they want to do is they want to trigger those little guys in there to get the retail traders to start buying again. Try and get that thing to go back up. So they're going to do what they can to try and get the buyers to buy up. Come on, buy. And then they can flush it one more time. Take your money again. Take your money again. See what they do. Right now, it's just kind of dying on the vine here. Let's go look at this one here. Let's bring it full screen. Come in here, go like that. Right down. Look at that. Look at that, Mark. If we didn't know any better, we'd say we knew better. If we didn't know any better, we'd think we knew better. That thing came right down and touched 38.2, just like a train on rails. I got it touched right there. Look at this. I got it right to the penny, and I got it right to the penny here. Look at this one. Right to the penny right there. And that thing came right back down to the penny and touched it just like that and bounced right off 38.2. Train on rails. No doubt about it. See that? Even Mark. Train on rails. All right. Let's see what it's going to do now. Do you think we're going to get our ABC top formation? We only have 15 minutes till the bell rings. I don't know if we're going to get an ABC top. That means that this market would bounce and come back up and then flush again like that. come down to 61.8. It may just come down. That might be all we got out of it there, Mark, is that one little bump right there. That's not a big enough bump to get in, though. I don't trust that to the next short side. I want it to give me a bigger one. I want it to break those green dots, have the dots flip, and then get a little arrow pointing to the downside, and then take the next little break of the green dots and take those. But I don't think we got 10 minutes left to go. I don't think we're going to get that little pattern in there. See, I want this little pattern right here, only upside down. I want that little pattern right there, only inverted. We got to get it to move. If it breaks the 38.2, it'll probably come on down. It might go to 50, even down to that 200 or 61.8. Those are all target zones. If you want to put one in there just for fun, we can see. Put one in there just for fun. That's the NASDAQ trying to break that 38.2 previous low. Think it's going to do it? If it can't break it, it'll turn around and go back up, and we'll have to look for our ABC pattern. See if it's going to go up here. Because they might be trying to get us to go down, too. They might, oh, look at this. Watch, we can make them go in to a short position and then take their money. We won't actually go down. We'll just make them think we're going to go down. We'll break that previous low, and then we'll get everybody to put their orders into a short side, and then we'll turn around and go back up. That's called a Wyckoff spring when they do that. Of course, Wyckoff spring is the bottom of a head and shoulders formation too, and it's what breaks the head and shoulders and makes everybody angry. Learn about those Wyckoff theory, because it's really important. All right, we're taking one short. All right, just to ride that little break right there, just to see if it's going to come down and test 50%. It's trying. It's trying. Look at that, Mark. Look at that. Just like right out of the book. Just like on page 32 of the manual. I don't know if it's page 32. I just pulled 32 out of my little voodoo doll's ass. I don't know where that came from. Oh, look at that. Look at that. We're going to get, limit order. Quick. Limit order at 50%. Oh, we took one. Oh, that put us in. We'll take it off. So we took profits at 50%. I don't know if we made anything. I screwed up and got back in instead of out. Closed. Oh, we did. Made $80. Can't complain about that. Made another $80. We're up $358 on micros, Mark. How about that? $358 in the micro accounts. Land's redeeming himself. Is it going to go to 61.8 or is it going to stop at that 200 period moving average? Look at it go. Look at it flush. There's 200. That's our 200, isn't it? Yep, that's the 200. There it is. NASDAQ stopping at 200. Is it going to stop at 200 or go to 61.8? Come on, buddy. Let's see what happens. We got 10-minute bell. Has the 10-minute bell rung yet? It has. That was probably the 10-minute bell. All right, let's do this. If it'll hit 61.8, we'll buy one right there. Come on down. Come on down to 61.8. Look at that one bar. Man, it's flushing hard. Man, it's just kicking out. Everybody's jumping out. Nobody wants to hold a position overnight here. Come on. You can do it for me, baby. Let's roll this thing out a little bit. Make it easier to see. Come on. Here it is. Let's get rid of all these little arrows. Delete all the arrows. Okay, come on. Touch 61.8. You can do it. You can do it. You can do it. We got to put it just inside 61.8. No, maybe not. There it is. Oh, we got it. All right. Now what do you do? Well, market's going to turn around and go up. It always bounces off 61.8, doesn't it? Doesn't it, little guy? It always bounces off 61.8. Wait a second. You're S&P 500. Here's the Dow. Dow. thought this was the Dow. Which one's Dow? I don't know. Got to get the right one. Stabbed the wrong guy. It wouldn't work. Okay. He says it bounces at 61.8 every single time. So make it happen, dude. Make it happen. What happens if it doesn't? Well, come on. We put another one in right down here. Take it at halfway between at 78.6. We'll put another one in here at 78.6. But it's going to bounce at 61.8. This little guy said so. And it said so on page 82 of the book. Look, this guy's really cool. Can you see him? Look, he's got little bottles on him full of magic. Like this one's got his little pins in him in there, but over here, I think these got to be like dead rabbit bones or something. I don't know. The little cool bottle full of magic. None of the others have that little guy. This little guy came, and he doesn't have any little magic bottles. Kind of disappointed. I want some dead chicken bones or something wrapped around his neck. Okay. Bounced off 61.8, just like a basketball. We're up another $60. Can't complain about that. What do you think, Mark? Five minutes till the bell rings. I say we just stay in till the bell rings and see where it goes. All the way, win or lose. How far is that thing going to go? Everybody's bailing out. They're buying the shorts back. Oh, that's $100. We should just take that off. That's $100. That's $1,000 on the regular market. Come on, baby. We got 5 minutes to go, and we're at $100. Exit chart. I said I was going to take it off, but that's $455 on the micro minis. $55 shy of it. That'd been $5,000 if we were trading the full size markets and did the exact same thing. But that's okay. $500 on the micro minis is okay. Look, this market's still going up. It's going to probably keep going up for another 5 minutes. But that's it for me, man. I'm going to sell you something. All right, what I need you guys to do is you need to go get your Pit News magazine. If you haven't got Pit News magazine, how can you ever make $500 on the micro minis? You got to have Pit News magazine so that you can learn how to do this stuff. I stopped writing the book so I could publish it, but I never stopped writing. And what I do is I just keep putting all that stuff that I just keep writing back into Pit News magazine. All right, so get you a subscription. It's only $19 for a whole year. It's not like it's $19 an issue. It's $19 for 12 issues, and it's really good. Just ask anybody in here. Anybody have Pit News magazine? If you like Pit News magazine, give me a thumbs up. That's what we do in these YouTube things, right? We do thumbs up stuff. So give me a thumbs up if you like Pit News magazine. And you guys who don't have Pit News magazine, you can get it for 50% off. It's regularly $39.95. And as soon as I change this, we're going to raise the price, but I haven't had time to change it because I'm so busy. So you better do it now. All right. For now, it's still only $19.95 for an entire year. So let's make that happen. Go get your Pit News magazine. And if you guys had fun today and you liked what we did here, go ahead, click that little thumbs up, and we'll catch you guys tomorrow morning, bright and early at 8 o'clock. And we'll do a little bit of, I don't know if we're going to do we'll do a little trading. We'll probably do a little day trading in the stock market since we got our class for the stock class. For the day trading class, we'll do a little day trading in the morning, and then we got to do our UBI portfolio. We'll look at that, see where we stand with our UBI portfolio, and other than that, man, we're going to have a really good time at 8 o'clock in the morning. It's going to be a party, and so I recommend you not miss it. All right, because we're going to party with these little guys. Okay, take care. We'll see you guys tomorrow.